Go.
When we consider our retirement years and our finances, something that we oftentimes don't consider is what happens when a spouse passes away and what kind of income are we left with? Now, let me explain it this way. I'm going to give you an example of a quick story. These two women were best friends. They're both 65 years of age. They lived next door to each other. So their homes were relatively the same worth. They had similar lifestyles, so their expenses were similar. Now, both of these women lived to be in their early 90s, but there was one big difference. Now, both of these women made about $1,000 a month on Social Security. Their husbands made a little bit more. The difference was the one woman, her husband lived until she was 90. The other woman, her husband passed away this year when she's 65. Now, what kind of an impact does it have? Well, obviously, the woman whose husband passes away, she gets the higher income now from her husband, the higher Social Security income, but she loses her $1,000 a month. What's $1,000 a month less she gets? It's $12,000 a year. The other woman whose husband lives to be 90, or lives to be where she's 90 years of age, she has 25 years of two Social Security incomes that her neighbor doesn't have. That's $300,000 that she's going to make that her friend, the neighbor, doesn't get. Well, what does that mean? Over a 25-year period, she's probably going to have to buy a couple of cars. She's going to have to do some, work on the home, maybe a roof. The air conditioning unit, heating units probably need to be replaced over a 25-year period. House is going to have to be painted a couple of times. Lots of expenses can come up. Now, who's going to be able to absorb those expenses easier? Well, obviously, the one who's got the extra $300,000. But there's a cure to this. The woman whose husband passes away when she's 65, if she had taken out a reverse mortgage when she was 62, or if she takes one out now when she's 65, she might be able to make up that $300,000 in reverse mortgage income. Especially if she utilizes a line of credit. She may actually end up with more than $300,000 over time from that line of credit. So when you look at your retirement years and you look at your finances, why don't you talk with us? Because you don't know what's going to happen down the road. Give us a call today, send us an email, find out what your options are, find out what kind of financial flexibility the reverse mortgage can provide to you. We'd love to talk with you.